Hello everyone, here Chris Capri, founder of Second Skies. Today we're going to talk about the Ichimoku Cloud. The official name for this is the Ichimoku Kinko Hero One Glance Balanced Cloud Chart. This is a staple indicator amongst Japanese traders and Japanese trading rooms, and it's part of the reason why the yen pairs often move to different support and resistance levels. It's because most of the Japanese players that are trading those pairs are using different indicators to measure these pairs. And so this is a specialty, or this is a sniper at really taking out the Japanese yen pairs, but it's also amazing at following all pairs as well. Let's get into the chart, the construction of it, and show you how to use it. Okay, so here's the actual chart itself. This blue thing you see right here is the cloud. The cloud is designed to represent support and resistance, and it's supposed to represent it several layers deep. Koichi Hosono, who developed it, realized that support and resistance is not a single line drawn in the sand, but comprised of orders several layers deep, and that's what the cloud is designed to do. It actually has 3 lines, but I've taken out one of them because I find it to be completely ineffective, so I'm only going to give you the ones that I find useful in this. It has 2 lines, 2 major lines. It's the white line is the Tenkan line, which is a shorter moving average, and the red line here is the Kijun line, a longer moving average. Ironically, they're the same numbers as they are for MACD. They have a 26 and a 9 period moving average. Now, the base of the signal is based upon the initial crossover. That's the first part of the signal. Where it crosses over determines the strength of the signals. This is the beauty of it. If the cloud is representing support and resistance, then for a buy signal or a crossover below the cloud, it would be weak because it would be a buy signal below resistance. Inside the cloud is considered medium in strength because you're inside support, resistance in this case here, and above the cloud is the strongest signal you can get for a buy signal because it's cleared the resistance. Now, once you get a crossover, the next thing you'll need is price action to break the cloud. If price action has broken the cloud, if I'm trading on an intraday chart, I'm looking for about a 15 or 20 pip break. As soon as I have that, I will be getting in. So now here you can see the crossover occurs about 107, and look what happens here. It keeps you in the trade for a nice move. Now, the general exit, some of the exits can be the cloud itself, but on intraday trading, I like to get out when the crossover happens in the opposite direction. So here you get the bulk of this entire move here, getting out about 107.60, 70 level here, and getting at 107. Notice how it captures most of the move. It's fantastic. This is the biggest portion of the move, and that's what the Ichimoku Cloud is designed to do. It's designed to get you 80% of the move or better because it's a trend following indicator. Now, taking a look at another example on an even shorter time frame, let's test it out. Pound yen, very volatile pair, just had a recent breakout of the 213.75 level, and the Ichimoku Cloud got you in the whole time here. So take a look here. We have a crossover. Price is broken above the cloud at 213.50, and it carries you in a nice length of the move here, and boom, gets you out right on the crossover here, just about 215.50. You're talking a 200 pip move in less than a day. Very, very powerful move here to catch, and notice again how it caught 80% of the move, again capturing the bulk of the trend here. Okay, now take a look at a sell here. We have a crossover inside the cloud, so this is considered medium strength by default. Now, look at what happens here. We cross over, price breaks the cloud by about the 15 to 30 pips here, so we'd be getting in right around 81. It tests some of the cloud here, but the cloud acts as resistance, and then look what happens over here. Boom, it carries you in the trade for a nice long move, capturing again about 80% of the move. Crossover happens around here, and it gets you out about 79.75, and you're in at 81. It's a good 125 pip move there, again in a day's worth of work. Now, those are intraday time frames. Let's check it out on its real winner or its real killer, which is the daily charts here. The longer the time frame, the better this pair does, as with most indicators. But this thing is a beast because on daily charts because it keeps you in these long, powerful trending moves here. Okay, pound yen was no exception to this here. So pound yen created a nice little crossover below the cloud. Now remember, if the cloud is support and resistance, then in this case, it crossed over below support here, so that means you've cleared through all the orders. You should have smooth sailing ahead here, and that's exactly what happens. The crossover occurs right about here. Now in daily charts, once the crossover occurs, I wait for that candle to close, and then get in on the open of the next candle. This crossover occurs right in between the two candles, so let's say we got in here. You're talking about 221.5, and look where it gets you out. Right about here at 210, 1,100 pips in about 2 months. That's a very powerful move right there. And then look what happens. It exits you out, but then gets you right back into the same level for another move, crosses over right around 210, and then gets you out right around 202. So another 800 pip move here in a matter of 4 months, 1,100, 1,800 pips, 1,900 pips. Not bad at all for 4 months worth of trading there. On daily charts again, this thing takes over. This thing is king. Now some details to remember about it. It consists of three major lines and a cloud. The Tenkan line, which is the Tenkan line, which is the shorter moving average. It's the highest high plus the lowest low divided by 9 periods there. So it's a 9-period MA basically based on the highest high and lowest low. The Kijun center Kijun line is the longer moving average. It's a 26-period one. The Chiku span, even though it's there, I do not use this at all whatsoever. So we can pretty much delete this across the board. Now the cloud itself, which is really all you really need to know, is that it is support and resistance levels. But what it does is taking the Tenkan sign and the Kijun line for the Senku span A, which is the one part of the cloud, and then it's factoring it over 26 time periods, whereas the other part of the cloud is the highest high and the lowest low. So we're capturing good levels of volatility here, plus averages for this pair as it moves along. It's a brilliant way to capture support and resistance levels here, and those are the major details or construction of the cloud. Now to sum everything up, this is a trend following indicator. So again, there are going to be times where it's just not going to be in the market, and that's totally fine. When it's choppy, this is not going to stay in. It's designed to reduce the false number of breakouts. But the beauty of this is when it catches a good trending move, it's going to get you in 80% of that move. And so because it keeps you in the most of the move there, you're going to have to be able to hold on to this one. So patience, grasshopper here. This one will want to keep you in the move for a little bit. It may test your patience, but that's okay. This one is fantastic. When it gets you a signal, this thing is generally, traditionally, 80% accuracy and above. And so as long as you don't go below a 30-minute time frame, you're going to be shooting at 80% accuracy and above. This is what the Japanese traders like. They like to be highly accurate and patient, and they'd rather be accurate and patient than be really active and less accurate. So they're looking for the one-shot, one-kill method. Okay, so for some of you there that are looking to take your training to the next level, we specialize, and I specialize in private education and mentoring. I like to pour all my energy into a trader inside 1 month and take them from wherever we're at to a level of profitability inside a month. I do this every single month to traders all the time, no matter what their level is. Where does this trading actually come from? Well, some of the systems that I'm teaching are all part of the 2S Sniper system. Maybe you don't want the private education, but you're looking for a systematic way to trade. This will save you 2 to 3 years worth of work, and it'll give you a professional, institutional grade strategy way to trade the markets. And so this way it'll save you time and money because you won't have to do the research. The system does it for you. If that's something you're interested in, the Sniper system is the way to go. Some people also like trade signals and live market analysis to talk to somebody and get feedback throughout the week. I give 2 of those throughout the week. Now, if any of these services sounds interesting to you, email me info@2ndskies directly, or you can visit our website, www.2ndskies.com. Until then, good hunting, everyone.